$114 billion, that's how much investors have pumped into bets on a stronger US dollar, making it the most bullish the market has been on the buck in a decade. What's behind this surge is a mix of factors, but mostly it's about the oil prices and the renewed Middle East tensions that are reviving inflation concerns. The jump in oil prices on Wednesday is a key factor here, as it's bolstering expectations that the Federal Reserve may need to keep policy tight. If oil prices keep climbing, it's likely the dollar will follow, making those bets look like a smart move. But it's a high-risk, high-reward situation. If oil prices drop, those bets could quickly turn sour. The dollar's strength is also tied to the overall health of the U.S. economy, and with the Fed releasing minutes from its last meeting, we're getting a glimpse into the minds of policymakers. Speaking of which, the Fed officials were split on the direction of interest rates at that meeting, which is a significant development. It shows that there's no clear consensus on where the economy is headed, and that's making it tough for investors to make informed decisions. Moving on to another big story, Michael Burry, the investor who predicted the housing market bubble, is making some interesting bets on sportsbooks DraftKings and Flutter. He's wagering that regulators will eventually crack down on prediction markets, which could curb the growth of these companies. This is a bold move, considering how hot the sports betting market has been, but Burry has a track record of being right when others are wrong. It's worth keeping an eye on this one, as it could have big implications for the sports betting industry as a whole. In other news, stocks are bouncing back after a brief dip due to geopolitical tensions in the Middle East. The U.S. concluded a second day of strikes on Iran, which had investors running for cover, but it seems the panic has subsided for now. The key thing to watch here is oil prices, as they're the main driver of market volatility right now. If oil prices keep contained, it's likely the markets will remain calm, but any spike could send stocks tumbling again. And finally, in a bit of a surprise move, a special-purpose investment vehicle set up by Bain still holds a 14% stake in Kioxia, according to a recent update. This is a significant development, especially given the complex web of investments and ownership structures in the tech industry. And that's all for today. Tune in tomorrow when we'll be taking a closer look at the implications of the US-Iran conflict on global trade and commodities, and one key economist is warning that the situation could be on the verge of spinning out of control.